Hello and welcome to another round of Market Watch. My name is Pasdu Pereira.
Hi, I'm Shadir Jannat.
Yeah, if we look back the last 2 to 3 weeks, we have seen a very interesting market, Shadi. If we look at the market, we have seen a sort of a significant rally in the market.
Yes.
In your opinion, what would be really happening, or rather, what has been happening in the market today?
Yeah, Basindu, I think since 24th of March 2017, we saw ASPI had a major rally, very bullish sentiment. I mean, all the candles, we saw big, huge candles. I mean, so since that point, we saw a 9% positive return on the ASPI total return, which is it's up by 560 points, and also the S&P 20 is also up by 8%. So this is a major rally compared to the overall year-to-date performance. If we see year-to-date return stands at currently 5.1%. If we can compare this with the regional markets, Karachi is 3.19, and also Vietnam stands at 7%. Malaysia is around 6.7, and the Asia region index, it is around 10%. And also MSCI Emerging Market Index, it has performed around 13.6%. So we see the Colombo Stock Exchange has been performing in line with the regional markets. And also I think one of our previous episodes we mentioned that among all the regional peers, ASPI is the only negative performing index year to date. So now it's back in track.
Right.
So there was a major rally we saw. And also, Pasindu, if I can mention the turnover values, average turnover per day year to date so far, it's around 850 million compared to 2016 2016 average turnover levels. It was around 687 million per day. So we see these improvements right now. But what's worth noting is Pasindu, the net foreign inflow. I mean, now year-to-date net foreign inflow is approximately around 13 billion rupees. So since 24th of March 2017, I mean, foreign contributors for the total turnover is 72%.
Right.
So the major contributors are the foreigners. So the major bulls are the foreigners. So we can see clearly this foreign interest. I mean, now what makes it interesting is like, I mean, as I think previous episode we mentioned last month, I mean, PE is very attractive, stood at 11.7%. And also technically we saw an oversold picture, and the market was hovering at that region since the beginning of year 2017. And also we indicated major support, 5,965 levels to be a major support, and the market remained above that level. And also as I mentioned earlier, it was the only negative performing index compared to its regional indices.
Right.
And also another point during last month was that the emerging market index was down by 26% compared to the overall world index. Okay. So also we had from a technical another viewpoint, if market breaks above the 6,250 levels, it will be another upward rally. So all these expectations are now we have witnessed now.
Right.
So I think foreigners are really bullish, and now they have entered, and we witnessed this major rally in the market. I think I just want to also know, Pasindu, I mean, from a local context, current macroeconomics, is there any exciting news or any change we can relate to this?
Yeah, Shadi, actually we were talking about the macroeconomic situation, I think 2-3 episodes back, especially towards the end of the March. We have seen some contraction in policies again came into the picture through increasing the policy rates. And again, we are talking about some pressure on the market interest rates too with that particular policy move. And again, the pressure on the currency. And again, we have seen some, the lowest level in foreign reserves position. If you look at the last March, it's around some $5.1 billion level. So amidst these things, especially the inflation point of view, also we have seen some rise in the inflation. So all in all, the macroeconomic front, I don't see much exciting news or the trends or the developments which really led to this particular market movement. But having said that, if you look back 2012, again another contractionary year where we have seen in the recent history, and the market dipped to the lowest level. But if you look at the 2012 also, almost entire year was a contractionary year from the monetary policy point of view. Exactly the similar situation where we can now experience in the 2017 also. But if you look at the stock market behavior in mid 2012 onwards, we saw the foreign interest was with the market, and we have seen the market was having a great rally irrespective of the policy tightness throughout the 2012, because at that particular point the expectation was that the foreigners' expectation was that years from 2013 onwards some policy relaxation come into play. So with in line with that, they accumulated stocks from the mid of 2012 onwards. I think that kind of a similar scenario where we can see we are in the almost mid 2017, now we are in the late April. So with the expectation of the relaxation of the policies maybe in the 2018 or maybe towards the end of the 2017, they probably would start accumulating. I think that's what, as you said, the foreign contribution to the total turnover level stand at healthy 72%. I think that's the highest level where we have seen in the recent history. This is what the macro climate, Shadi. If we go into the the continuation of this momentum, what do you feel like? Will it continue or will it have a sort of a hold? What kind of a scenario can be expected?
Well, Pasindu, as you said, considering this current macroeconomic context and also the foreign interest on discounted market, I mean the attractive PEs and so mainly the foreigners, I mean the foreign participants were focusing on our market heavyweights, of course, JKH, Commercial Bank, then after that we have two more counters, Ceylon Cold Stores and Nestle. I mean these are the main stocks. Mostly the foreign inflow we witnessed. So if I can aggregate the turnover of these four counters, these counters contribute a total turnover of 54% for the total market turnover so far.
You mean these five or these four stocks counters alone, right? Significant.
These four counters have contributed up to 54% for the total market turnover during this period. So what we can see is, and these stocks are the most foreign interest stocks, and currently all these counters are at overbought levels. So the sentiment we see currently it's at overbought levels. And what we can, I think if we can talk about the PE levels also, Pasindu.
Yeah, actually if you look at the JKH, which trades now currently at 13.7 times multiple, where we saw the multiple was at 11 times. I think that created the more attraction towards the JKH, and it has now reached 13.7 times. True, it was trading at average on 15 to 16 times PE levels. Still we'll have a chance to for the further appreciation too, but you said from the technical front that would be overbought level. And if you move to the Commercial Bank, again we have seen the huge interest from the foreigners, trading at 8.9 times. This would be the highest PE level where we have seen for the last 1.5 years from the Commercial Bank. It's now basically move on to the highest band, I would say. Again the Ceylon Cold Stores point of view, again traders at 25 times PE multiple. I think this bit of a high side multiple again. At the same time, if I just look at the outlook, where the corporate earnings point of view, Shadi, I don't expect much exciting numbers to be published in the next, we'll say 1 to 2 quarters, because simple fact is, the inflationary pressures are also there, and the rising interest rate may put the pressure onto the bottom line now, or rather the profit figures. So with that expectation, I don't expect much exciting numbers to be published. Again, if you look at the macro point of view, again if I go back to that point, some of the political volatilities could also be expected, especially the Indian Revenue Act to be come into play.
Yeah.
So with that, there would be some kind of a volatility may come in place again, because some ambiguity will create in terms of the government revenue numbers and all that. So again, there would be some pressure to the market movement, and I believe there would be a sort of a pressure to this current or the ongoing movement, as you also predicting.
And from a global context, we are expecting another more 3 rate hikes from the US side also.
Yes.
I mean, that can have an impact.
Yes, definitely. But I noticed one thing, Shadi, if you look at the government, the bond market, where the foreign holding in the government securities, where that was having a continuous outflows. But if you look at the last 2-3 weeks, where we have seen some marginal improvements, that's because of the reason, I think, towards the end of the March, we have seen a rise in or an increased policy rate that put the rates up in Sri Lanka, so that will be much more competitive. But again, having said that, if you, as you said, if some more Fed rate hike may come into play, again Sri Lanka needs to match that particular thing. So that's what I'm expecting, another round of policy rate hike towards the end of 2017. So within this context, yes, there would be a sort of a slowdown could be expected from the market performance. As you said, now currently it's overbought region, right?
Yes.
Yeah,
Prashant, if I can add to that, I mean, we feel the momentum can slow down, because now, I mean, considering, I mean, it's a very steep run. I mean, like since 24th of March, I mean, market started a very rapid rally. I mean. So what we feel, we can expect some resistance at 6,600 and 6,650. That's the next key resistance region we are looking at. I mean, and also as I mentioned earlier, the 4 counters, JKH, commercial banks, Ceylon Cold Stores and Nestle, these were the heavier counters, I mean, concentrated by the foreign participants. So these stocks are already at overbought level. So if we can set these stocks as a proxy sample for the overall market, I mean, that then the next expectation is to market to slow down. And if market resists to break above this region, I said 6,000 and 6,650 levels, we can expect the market to have the new support, which is 6,300 to 6,250 region. So this is the level we are looking currently now. Anyway, currently also I have to mention, currently the ASPI is 3.5% above its 200-day moving average levels, which is a little bit high, and also the RSI is heavily overbought, it's above 80 levels. So I mean, in conclusion, Prashant, what we can say is overall we see, I mean, since 2015, if we can just see the overall trend with a moving average, the market is going through a downtrend. But in between, we witness so many upward momentums. So what we have to emphasize and remind our beloved investors and viewers is that there is plenty of opportunities. There are short to medium term cycles where you can make good return. So I mean, hope
actually, if I add something, Shadi, actually we were talking about the attracting the market from the fundamental point of view also. We were trading at 11.7 times multiple, which was one of the lowest level if you look at the last 4-5 years. So definitely yes, now as we discussed, for a long-term investor, I think that was a best time to enter into the market, and I think it is really reflecting if you look at these performances. Though it will getting a bit slowed down within the next we'll say few more weeks. Still, I would say from a long-term perspective, still the potential is there for the market, especially if you look at the country's growth potential and I would say the fundamental story point of view. Shadi, thank you so much for having a discussion today. Thank you very much for viewers at home, and see you next time with the Market Watch. Thank you.